What are you telling clients to do right now at record highs?
Stay invested. We got a little more defensive about a year and a half ago. So granted, we were a little early. We went from being overweight equities to neutral, and we're very happy with where we're sitting right now. We've used kind of a barbell approach. So we've been overweight tech for the last few years. That's obviously helped our performance a lot. But then we've also had some managed volatility, some more defensive exposure. So being neutral in the defensive helps us with the volatile periods like we had at the beginning of this year. And the tech and some of the consumer discretionary has helped us get the returns we need for our clients.
Is it time to be rotating into more of the value-oriented stocks at this point? I mean, the action that we saw in the markets today, very interesting. We saw the financials with a nice gain in today's session, even though the yield curve actually got flatter, about 20 basis points or so.
Yeah.
And that makes you think maybe this notion that it's time to go into value is really kind of, keeping hold here.
I mean, value is definitely underloved, or completely unloved is probably a better phrase for it right now. So there probably are pockets in there to play in. Financials are interesting. I worry that the curve is going to keep flattening for a variety of reasons, from Treasury issuance at the front end and the Fed to a lot of global factors keeping the long end down. That's one factor among many that's going to drive the financials. But we have a little bit in there right now, but I would be hesitant. I wouldn't have enough conviction to go full bore into value right now.
But financials outperformed everything today. How do you explain that?
It's one day. It's one day. I don't try to explain anything that happens in a 24-hour period. It could be the wind blowing my hair back. It could be anything. I do think your point is really a good one on EM. I think one needs to be active there. You don't want to use ETFs to express that view right now. There is value in there. I also think Europe's interesting because when we think about these trade wars, I would guess the administration's gained a lot more pressure from donors, from voters, from businesses in the auto sector. And that's more of a domestic play that you want to be careful with. So I think resolution on the auto front seems relatively more likely than China front in the short term. That's going to benefit Europe more than China. So if you're looking for pockets of value besides the value style, I would think Germany is interesting. Italy is still a huge wild card to me, and perhaps a really ugly one. But Germany, I think, probably does have some value right now. It plays on China, it plays on the U.S., and it plays on a resolution on autos.
So we talked a lot about China, and that is kind of the tougher negotiation. When do you get worried that this negotiation has gone too far and is starting to do damage?
So, I happened to spend a week in China this summer, which was an amazing trip. And it was interesting to me that already in July, the Chinese government was giving subsidies to export-related firms. So we talk about the farmers here in the U.S. They already started a few months ago. So they know that they need to manage the pain to keep the economy afloat, to keep social and political stability. They're there. The currency move over the weekend is meant to, I think, help negotiations with the U.S. They don't want the U.S. coming after them as a currency manipulator. So fine, stabilize the currency, prevent capital outflows, focus on the fiscal stimulus. But I think they're going to play the long game, to your point earlier. I think they have more leverage than America gives them credit for.